Hey guys, this is Joey Verga from Verga Realty. I got my friends Jesse and Mike from the Bank of England, and we're here to talk to you today about special financing available for those who were affected by the storm here recently. So we're going to go through some of the hot spots of it and see if we could bring some good information and content. We know that a lot of people have been through some rough circumstances, and this is what we can do, and this is what we were working on the days after the storm, trying to come to you with something of value that can help folks get moved on. So we're going to go through it a little bit, and this is Mike. Mike's been researching it a lot, and he's going to tell us a little information about the loan, kind of get us kicked off, and basically we'll just do a Q&A. Okay?
Sounds good. Thanks, Joey.
Thank you, Mike.
Basically, this is a loan geared towards, specifically geared towards disaster areas and victims that need recovery efforts. And basically, it offers 100% financing for those that have had their homes destroyed or rendered uninhabitable in a federally declared disaster area. It's a great option for those type of homeowners or renters. That's a neat thing about it, is it's not just for people that already own a home. If someone's living in an apartment and that apartment's destroyed and rendered uninhabitable, then someone that was paying rent before could become a homeowner. And it's got some relaxed qualifications versus a normal mortgage loan to make it easier for people that have been displaced to get into homes. For example, those with a 580 credit score or higher can be eligible for this program. If they're not able to work on their regular job, this program does allow those individuals, if they're working on a short-term another job right now, to use that income for qualifying, whereas ordinarily with a regular mortgage loan they wouldn't be able to do that. So it just gives a little more flexibility. If normally with mortgage lending we have to get bank statements documented. If they're unable to get those, there's other ways we can document things besides having to go through that level of documentation. So it tries to make things a little easier to let people get in there and buy homes. Another really neat thing about this is if you already own a home and it's being demolished, we don't have to count that in your debt ratio for this new program. That we just have to get documentation that you're working with your mortgage servicer and that the insurance proceeds are going to take care of that other mortgage. So it's geared and designed to help you get back into some good housing as quickly as possible and as easy as possible considering the circumstances.
Well, Mike, let me ask you. I mean, everybody starts off in the process of getting a mortgage, and the first thing that comes to mind is that credit score. They're always thinking about the credit score. What do the credit scores have to be for this specific 100% financing disaster loan?
Well, Joey, our company has an overlay of 580 credit scores or higher. If there are some unusual circumstances because of the hurricane coming through where your credit has been damaged, and if, for example, if you're past due on your mortgage payments right now, when we can show where you were current before the storm, now you're past due because of that, they don't hold that against you in underwriting for this product. It's a neat thing. So
there's some good flexibility on the underwriting side.
Yeah,
usually that doesn't happen, folks, in a normal mortgage case. When it goes to underwriting, they go by certain rules and regulations, and that's what they go by. But it gives the flexibility, this product does. If the storm did set you back a month or two and you were more focused on necessities of life, food, water, stuff of that nature, gasoline for vehicles, and you did get behind, this does give you a little bit of flexibility like I've never seen before.
Yes, and even if you're over 3 months behind on a mortgage, if you can document that you are in a forbearance with your lender or a postponement of that, then that can still be taken into consideration with the underwriter as well. That's more on a case-by-case basis, but there is a lot more flexibility than a normal mortgage loan with this product in that type of situation.
Mike had mentioned it, and Jesse did earlier when we were speaking, but this is for renters too. I mean, if you rented or you were in a lease and that property was, what did you say, deemed uninhabitable. If it's deemed uninhabitable, then this is for you as well. We need a 580 middle credit score for both borrowers if there's more than one on the loan, correct?
Correct.
Because we look at the lower of the two. These guys also got some neat products available that they can offer to a lot of our people with the credit rescoring. What do y'all call that? Rapid rescoring, is that correct?
Yes.
Yes.
Rapid rescoring, where they can get in there if you do need a little nudge here or there, we can get you in the right direction. Okay, so what counties, that's a big question right now, what counties, what areas of Florida can this be used for? Now it's got to be uninhabitable though, but here's the list of counties.
Yes, I'm just going to read this list off. There's several of them, but Bay County, Calhoun, Franklin, Gadsden, Gulf County, Holmes, Jackson, Leon was added to the list yesterday, Liberty, Taylor, Wakulla, and Washington County.
Okay, that's a nice list of counties, and there's a lot of storm damage further north than just the coast. So, I mean, this reaches out. This is a large share of the Panhandle that we're talking about here. So the reach goes very far, and we can service those areas as well.
Right.
Okay?
And I'd also like to mention this program offers 100% financing, so no down payment is required. There are still closing costs to be dealt with in one way or another, and the program offers flexibility for that. A lot of times we can offer as a lender what they call lender credit. If you go with a little higher interest rate, they can build lender credit, which is money basically paid towards your closing costs by the lender in exchange for that little higher rate. Or if you have a family member or an employer that's willing to gift or loan that money to you, that can definitely be used. And it can also be paid by the seller as long as the appraisal will support it.
And that's very nice. Usually we typically try to get that paid elsewhere besides our buyers' pockets. And whether it's done through a bump in the rate or most of the time strategic negotiation with the seller when the contract's submitted. Let us worry about that for right now. But the neat thing is the gift funds, if you do have a family member or somebody like that that can come forward and help you out with a little down or a little closing cost, they can gift that into you, and that's nice to have. And that's a second seat though. First, let's try to see if I can get you around the down payment, or not the down payment, but the closing costs where it doesn't come out of your pocket at all and it doesn't affect your rate in any kind of way.
Everybody's situation is unique, and based on our experiences, if you can just let us run a pre-qualification and assess your situation, it seems there's always a way to structure the loan and the sale transaction in such a way that it's going to work for you in the best way possible.
Yeah, it's like a fingerprint. No transactions the same, no borrowers the same. There'll be special things, especially with the flexibility with the underwriting that these guys were telling us about. It is going to be a case-by-case scenario, and that's why we're needing you guys to reach out to us. And you can private message us. There'll be a link somewhere around here below or above, and you can click on that and submit your information. We'll get in contact with you and see if this program will work for you guys and if there's some kind of way that we can help. Okay? Anything you guys have? Or
I'm not sure if you mentioned another benefit of this program is that they don't require reserves. Is that right?
That's right, yes. Most loan programs, if you own two houses, are going to require you to have reserves, which are basically savings in your either your savings account or your retirement funds after closing. And the thought behind that is if you own multiple properties, they deem it to be a safer loan if you have those reserves. Well, with this program, there's probably a good chance some of you might already own another home that's going to be sold or paid off with the insurance proceeds, but there's no reserve requirement with this. So that's just another feature of this to try to make it an easier way to get into your new home, basically.
see, that's another neat little niche there that I'm not used to. This is a great product. Everybody does need to reach out and see if we can make contact and see if we can help you out. Is there something else off of there you saw, Jesse, that you'd like to talk about, or?
I think Mike's covered it. I think.
Okay.
I'll mention one other thing too, and that was that basically the one part of this program, it doesn't have a renovation feature to it,
Okay.
but our Bank of England group can consider renovation escrows on a case-by-case basis. This is, say if the house is in need of some roof repair, minor repairs to be done, we try to work with our borrowers, and we we can sort of basically work it out where that can be escrowed at closing. It lets us go ahead and close on this without that renovation having to be done prior to closing.
That's
Let
nice.
you go ahead and get in the house, because there's so many homes around here that have that issue.
Yeah.
And that's something we try to work with everybody as best we can to get them into the homes.
Some of it's
So-
as simple as missing a few roofing shingles.
Mhm.
If it's a type of FHA loan, a lot of times it won't pass the inspection, won't pass the appraisal. So some of the stuff just as small as that, just a few shingles missing, can throw off an inspection. So this is a nice touch. This is different. So this is
Right.
really outside of the box and unique, and a lot of people can benefit from this.
And I'd just like to recommend, don't be afraid of applying. It's an easy process with us, and our goal is to get everybody that wants to buy a house qualified and able to do that.
Yeah.
And another thing I wanted to mention, Bank of England, our team is, we all work together. So we work closely with the underwriters. And so if there's an exception to be made, we can usually make that happen.
So that's nice too. It's kind of different from like a brokerage style firm where they have to reach out and go through channels. These guys got direct connection with the underwriters to be able to speak to them. In a lot of cases, a lot of lenders and definitely a lot of mortgage brokers do not have that capability. So you're kind of like a puppet on the string waiting for the next move. So that's definitely a good thing. But we're easy to get in contact with. You could talk to Jesse, my assistant Summer, myself, or Mike. As everybody starts coming in, it's a case-by-case scenario, but if you're not good with the internet or anything like that, just reach out to us. I'm going to have a telephone number here that's going to be answered, and we can get you in contact with someone to speak to, because I understand a lot of people are still without some of the main utilities, internet, some areas at this point still without power. The water's still on boil notice, so people are still kind of living differently. So if it's easier just to pick up the phone and call us, we're available for that as well. You can speak to us in person. So that's the main thing. We will make this as easy as possible and achievable as possible. Okay? Well, thank you so much, Mike.
Yes, thank you very much.
I appreciate the information, Jesse.
Thank you.
Thank you as well. All right, guys. Thank you. We hope to hear from you soon.